Greg Hunter, welcome to Coast AM. We have not spoken before, so we'll get to know each other on the air, okay?
Sure, John B. Wells. It's good to be here.
Let me just toss something out so you can immediately shoot it down. I had I'd like to think is a genius moment the other day, and I thought, if Iceland can do what they do and just erase the debt and arrest a few bankers and just say, okay, we're resetting and starting to zero, and if debt and interest can all be, and money can be created with the stroke of a pen, what if there is no global financial crisis really? Because it seems like the operation hadn't skipped a beat. People are still doing business, this and that. Maybe this is just one great big smoke screen in furtherance of some great big war of some sort, or is that too simplistic?
Yeah, well, what you don't realize is that the Federal Reserve, this is according to the GAO report, they had a one-time audit. They pumped out $16.1 trillion in the wake of this crisis. That's the Federal Reserve, pumping out money. They also bought a couple of trillion in mortgage-backed securities.
Now, when you say pumped it out, does that mean they printed the cash?
Yes, they printed the cash. Everybody from Toyota to Harley-Davidson to foreign banks, domestic banks. Then we have 0% financing. 0% money, zero interest rate policy. It's actually between 0 and 0.25%, but effectively we have 0%. Okay. Interest rates that the banks can get. This is, it seems like we didn't miss a beat, right? But that was very expensive, very costly, and that was a full court press to, and to pull the stick back on the, on the plane that was nosediving into the ground, and they pulled it up, but we're skimming across the trees, and they're beating the wings, okay? We're buffeting the wings with tree limbs and branches. We're not really gaining any altitude.
All right.
And this thing with LIBOR is just, oh, boy. It is the biggest financial fraud in the history of the planet. If it's number one, add 1 to the 10th power.
Okay.
$800 trillion of transactions are set off LIBOR, and that's a good number from Forbes magazine, other people. Now, other people have put it down at 350 trillion, but let's go with 800 trillion.
Now, tell everybody what that is, Greg.
Transactions, anything with an adjustable rate mortgage, anything with adjustable rate interest rate. LIBOR is the London Interbank Offered Rate, and it sets interest rates globally. It is the money that 16 biggest banks globally, 3 of which are in the U.S., that's Citi, J.P. Morgan, and Bank of America. Royal Bank of Scotland started this, freak show where they got caught, setting, rigging LIBOR rates. So people might say, well, the Federal Reserve and some banks rig rates. Yes, that they're charged to do that. They have a charter to do that in their countries. The Federal Reserve has a charter to rig rates. That's another show, another day, but they can do that. This was supposed to be a real market rate set by the banks, a real rate of what it costs banks to loan each other money overnight. And then you put LIBOR out there, and there's several different renditions. It's 1 + 1 or +2 or +3 or however many, plus interest, percentage points higher. But this is 800 trillion in transactions. And people like Larry Kudlow said, I don't see how this hurt anybody. I don't know who was hurt. Really, investors paid for this. Cities like Baltimore paid for this when they bought interest rate swaps. CalPERS paid for this. Charles Schwab, investment firms paid for this. They're suing Charles Schwab.
Greg, you are so deep into this world, you're almost like talking to a technician. How does this... when it all rolls downhill, what happens to the everyday consumer that's making $35, $40 a year max?
What's going to happen is all these people I mentioned, for example, Charles Schwab, they're alleging racketeering. Everybody who lost money, who got some people may say, wow, I got a great rate on my credit card or my student loan or my mortgage. Well, on the other side of that, there are people who bought that debt, bought those mortgage-backed securities, bought those pools of credit card, bought those securities, made an interest derivative play like Baltimore that, oh, whoops, you mean you rigged the rate? People like, for example, there are going to be massive amounts of lawsuits, and that's why, if you take a look at 800 trillion in transactions, I did this last Monday. 800 trillion set. Let's just say that the banks, the big banks, are only responsible, and these guys are too big to fail because any one of them can bring down the system. And we have 16 banks that set LIBOR. Probably more than a dozen are being investigated and under the pretty strong suspicion that they were all colluding to set interest rates. Let's just say it's 1/10 of 1%. That's 0.10 of a percent of $800 trillion, and that's $800 billion. Multiply that, since they've been doing it since 2007, that's 5 times 800. That's $4 trillion in liability. That doesn't count fines. That doesn't count triple the damages in RICO cases. That doesn't count loss of business. I mean, when you enter a contract because of warranties and representations, I'm not a lawyer, but when you enter a contract, you know what that means, warranties and representations? It has to be what you say it is.
That's right.
Right? That's what
right.
So this is supposed to be LIBOR. It's supposed to be the real market rate of what we really would loan each other money overnight. An average rate. It's a real rate, not a configured, contrived, rigged. Yeah, no, it is. It's rigged. It's phony. It's fake. And, for example, Oakland, California voted just recently to say, hey, you know that those derivatives we bought from Goldman Sachs, they're not one of the banks that rigged the rates, okay? Well, we ain't going to pay them anyway. That's going to save us $15 million. Multiply that by every major city that has a derivative contract across the country. Oh, and by the way, you screwed us in those years past, and we're going to sue you. And how about CalPERS? And how about Charles Schwab saying fraudulent? And these are just the lawsuits that have already been filed. These are the charges already been filed: antitrust, racketeering, wire fraud, securities fraud. Oh, this makes your bank look better, right? I mean, this makes the assets on your books look better. When interest rates go down, okay, interest instruments like mortgage-backed securities and treasuries, that stuff is more valuable. So if you suppress rates, you make the stuff on your books, mortgage-backed securities and whatever, look more valuable. You look more stable. You look better than what indeed you are. Right. Just like if you go into a car dealer and you say, hey, man, I want to buy a car, and I see 0% on your top billboard. Yeah, well, great. Sit down here, Mr. Hunter. Have you had a bankruptcy? Oh, yeah, I've had one. Have you had a car repossessed? Oh, yeah, I've had one. What's your credit score? It's 450. Well, we can't loan you money at 0%, but we can loan it to you at 24%. So you get the high rate. But they made it out like they are so solvent, so good that they got low rates. Now, what does that mean when somebody buys your stock at RBS, for example, that just got fined $450 million? That's Royal Bank of Scotland, the bank over in the UK. Well, I bought your shares thinking that you guys were really solvent, and you really weren't. That's securities fraud. Yes. Do you understand the avalanche? They think, oh, well, it will really help the economy. So wait a minute. So we need to have, let's see, what are the charges so far? Antitrust, racketeering, wire fraud, security fraud. Oh, so we have to have that so the entire system won't implode because, and the reason why I say that is because another thing they were doing was what are called interest rate swaps. That is a kind of a thing that you do to force interest rates down, to hold them down. And small upward moves, if you're betting it down, can sink you. I mean, remember, I just said that we have $800 trillion, and 1/10 of 1% would be $800 billion each and every year they were doing this. Let's just say the interest rate swap market, okay? I was talking to who I have on my site Monday, Jim Rickards, who is a insider. Said, hey, you know, that market's about, the interest rate swap market is about $500 trillion. And this has been done since 2007. And if it's 1/10 of 1% multiplied by 5 years, you get $2.5 trillion. That's enough to wipe out all the capital at the big banks, according to Rickards. And he says, hey, if you let these lawsuits run, you're going to destroy the banks. Think about this.
Well, let me ask you this, though. Is it possible there are too many players as it is, or is that the problem? There are not enough players. I mean, what if these banks do fail? What if they get sued out of existence?
Well, that's the whole problem with too big to fail.
Well, the thing that's too big to fail probably should fail.
Well, I know, but, when you have J.P. Morgan with $70 trillion in interest rate swaps, and they go, if indeed they go under, I was reading that, on one article they were trying to explain interest rate swap, the derivatives, and they said, and in the article, the writer, who I can't believe this got through their editorial process, said, well, they're derivatives, and that's notional value. That means they're not real. They're not real? Really?
Notional value.
Yes, notional value. Wow, they're not real? Well, ask AIG if derivatives are real. Ask Lehman Brothers if their derivative exposure was real. How about Bear Stearns? Ask if the exposure is real. It's real, and that's the thing. So down to the little guy, we could have a systemic crash. It is that we have a very unstable system already. We have a really unstable system. Actually, I was talking to somebody who says, we've been talking in Bible school that this is end of days. I don't know if this is end of days, but I can tell you, based on the math, we're in territory that has been unseen in human history. And add LIBOR, the scandal, which everybody, you did what to me? You took, $5 billion, $10 million, $15 billion, $14 million, 500,000. Everybody who lost, no, it ain't okay. I didn't know I was going to kick in to help the economy and help everybody lower their student loan and credit loan and get a 3.5% interest rate. No, I was buying that. You screwed me out of interest. That's what these people are going to say. I want my money. Goldman Sachs is now suing. Is thinking about suing. They're not one of the guys that fix the interest rates, okay? But they're thinking, along with Morgan Stanley, saying, hey, we bet against you in derivative contracts. You knew that this was, rigged down. You owe us some money. And you know what? Wall Street's going to figure this out. Well, it's going to be really hard to figure out. Really? Let me tell you what Wall Street does. They account for shares and stocks and trades. I had a quarter of a share that I sold almost 2 years ago. I went to my local broker and said, "Hey, listen, I'm getting a thing saying I got a quarter of a share. I sold all this, right? This of the stock. I don't want to, pay tax. It's just kind of a nuisance, but it's going to get reported to the IRS. Not that I was in any kind of jeopardy, but I don't own it." Could you help me with this? The company is telling me this. The company is telling me, some XYZ company says, "Hey, you have a quarter share that's unaccounted for." Do you know that my broker found a quarter of a share a year and a half earlier? Found it, said, "Here's where we sold it. You don't report it to your IRS. Here's where we sold it." Got on the phone, boom. And I'm telling you that because these guys are going to be able to account for these losses. That's what's so ridiculous about MF Global. The trail's cold. It's hard to find the money. Really, $1.5 billion? And my broker in North Carolina, Greensboro, North Carolina, found a quarter of a share after a year and a half. And you can't.
Well, sure.
Yes, they're going to be able to quantify their losses, and they're going to be big. And take a look at what happened, like I was telling you about Oakland, California. Hey, warranties and representation. So you said this was a LIBOR. This is a rigged rate. This is a phony rate. You entered a contract with me with a phony rate. Even if it's Goldman Sachs who was entering the contract, you pay. We're going to sue you, Goldman. You enriched yourself, and you got enriched, and you didn't mean to, but we're going to sue you because you made money on us.
Greg, we're going to have a bottom of the hour break here in a second, but I know you're not a science fiction writer, but if you don't mind, what does this translate to? I mean, we've had a dust bowl. Japan's having their Fukushima. We haven't had a catastrophe with money since the 30s, not to the point where it caused where you got a dust bowl going and a depression.
Oh, this makes the 30s look like a party.
What could actually happen to people if this thing is not controlled, and can it be controlled at this point?
Well, what is Bernanke? I'll get you to the break. They've been telling us for 4 years that we've got a recovery, and now he's sitting in front of Congress going, Yeah, well, we're going to help out, and we're going to do whatever we have to do. We're standing by to do whatever we have to do. They're going to print money. And, in the Great Depression, everybody's always fighting the last war. In the Great Depression, do I have insurance? Do I have insurance? Well, nobody had insurance, right? People went out of business. They lost their money. There was no FDIC. That was the problem. You know what the problem is now?
No.
We have the FDIC. Oh, we owe you some money? How much we owe you? $200,000? Yeah, hey,
right.
Bob, print this guy up $200,000. A gallon of gas is $16.50, and a loaf of bread is $24.
Okay.
Right?
Yeah.
And Alan Greenspan said this in Congress. We can print. We can guarantee. We can give them the money. We can't guarantee the buying power of the money. Alan Greenspan.
We can't guarantee the buying power of the money.
Ding, ding, ding.
Okay. Well, we will continue our, just trying to extract all the pathos that I possibly can out of the interview, because in the same way that he who expects nothing is never disappointed, he who expects the worst could be pleasantly surprised. So we'll try and find the silver lining in that cloud when we come back. This is Coast to Coast AM. Greg Hunter, let me ask you something. I know you're a numbers man. You're an analyst. You're an investigative reporter. You've worked for a bunch of, easily recognizable organizations, ABC, CNN.
Yes.
So I know you're trying to run a reputable ship, even though, the mainstream media comes under continual criticism. Maybe that's why you went on your own.
They ignore a lot. I mean, USA Today ran this story about LIBOR on page 2A, like on Thursday.
I'm so happy you said that.
J.P. Morgan Chase is one of their big investors in Gannett.
Okay. Excellent.
That probably doesn't have anything to do with it. Go ahead.
No, not a thing. Would you mind just saying that one more time, since I stepped right on it, right at the salient point?
They have lightly covered this story, in my humble opinion, based on, I get the newspaper every day. The front page story on, I think, Thursday was some CEO hitting the glass ceiling. My old boss, Shelley Ross, used to say, rich people problems. And, here this LIBOR thing, I mean, this is a huge story. They have it on page 2A of the business section on USA. What it means to you, and it really didn't say anything about it, what it means to you is that, and this is back to your question, I'm sorry I didn't answer it directly, what does it do to the guy making $30,000 or $40,000 a year? Well, what it's going to do initially is be like you're living on $20,000 to $25,000.
Well, you said already, Greg. You said it's like we're talking $16 for a gallon of gas.
So and listen to the people that are already said. I just wanted to put together a little list of people. State attorney generals have already said they're going to sue on the behalf of their citizens. Florida, Massachusetts, several others. Pension funds like CalPERS. Municipalities like Baltimore, and many more are going to be suing. Charles Schwab, investors like Charles Schwab, and they are alleging racketeering.
Okay.
So it's going to come down to, think about the amount of damages. 1/10 of 1% would be $800 billion times 4 would be $4 trillion. And I was talking to Paul Craig Roberts this week on an interview on my site. He's a former assistant Treasury Secretary in the Reagan administration. He was in charge of all economic policy. An assistant is a number 2. So you have, like, for example, Geithner, then he has an assistant for economic, an assistant for tax policy, an assistant for, an
assistant for the assistant.
Right. Well, but these guys have, a couple hundred people working for him. So
Right.
He's a high-ranking insider guy. And I said, he says, well, they did it because they didn't want the system to go under. They wanted the banks to look more solvent. Low interest rates make those mortgage-backed securities look more valuable. Interest rates go up, people start defaulting on their houses. Their assets become toxic.
Okay. All right, now,
So,
Greg, you got to have food, you got to have fuel. You got to have fuel for the car and fuel for the body.
Is that I said, to Paul Craig Roberts, he says, hey, listen, the banks don't have any money. The Fed's going to print it and give it to them. They're going to keep interest rates low. I said, so what you're telling me, and Roberts is a good guy. He's just explaining what's going on. I said,
Right.
What you're telling me, we have to have fraud in the system to keep it from collapsing. Yes. Now you think about that.
I just heard somebody the other day describe a state that's so dysfunctional because it has to be dysfunctional, because if it weren't dysfunctional, there'd be 40 million people living in that state instead of the sparse amount that's there now. So is fraud a necessary component Seriously.
Well, the system. I was talking to James Rickard. He's on Monday, and I can't give you the entire interview, but he says this is a very unstable system, really unstable. Look at all the sovereign debt crisis, the mortgage-backed security. That's not over, incidentally. That's far from over. The whole interest real estate thing. I was talking to Robert Schiller of Case Schiller. He says we're in the fourth inning of a 9-inning baseball game with a housing crisis. It's been over 5 years. We're not even halfway through. We're not at a bottom. Those bonds, they're protecting the value of those bonds. So. All that to say this, that Paul Craig Roberts says, listen, they're not going to go after these guys. They are going to say we have to have. Listen, the interest rate, the loss in interest income is going to dwarf the loss in the value of the bonds.
So they're not going to go after them, you say?
Yes, he thinks they won't because we want to do the least harm. Well, these guys have got us by the throat. Hey,
let me ask you something, Greg.
Otherwise, you'll take the whole system down. These guys are above the law.
Okay. We've just got a few minutes here, so I want to ask you a bunch of questions that hopefully you'll have a quick answer on.
Go.
Because we've got so little time. Food. Oh, all right. Can you touch on the speculation that's driving up the price of oil to ridiculous levels, even though we know our reserves are fine? They're the highest that they've been since they started keeping records on them in either 80 or 81.
I'm glad you asked that question. And if LIBOR, this rate rigging scandal of LIBOR, and people think they're a lot, and J.P. Morgan has been accused, for example, of rigging the energy market illegally in court cases. Okay. Also, for years, GATA, the Gold Antitrust Action Committee, has been saying, and they've made a great case for this, that the gold market is suppressed. The silver market. I was listening to a couple of the anchors on CNBC a few weeks ago, and they basically admitted, oh, yeah, the silver market's suppressed. The markets are all suppressed. That's the next big shoe that's going to probably drop, is that these markets are going to become unsuppressed. And people will be flooding into, tangible assets. Some things will go down, some things will go up in price. But yes,
is there any point?
It's going to destabilize, and it's more. And Rickards was telling me, and this is a great analogy. He says it's like an avalanche, and the snowpack gets bigger and bigger and bigger, and the bigger it gets, the more unstable it gets. And then all of a sudden, one snowflake hits it, and boom, you have an avalanche comes down.
Is there any point in investing in any of these metals? A lot of people are pushing gold.
I think everybody, and I say this on my site, I'm not Kramer, so I don't pick stocks, and I don't say buy this and sell this. Everybody should have a core position because really they're just going to change the status. This is a new thing. They're going to change the status probably after the first of the year of gold. Because right now they value it at 50% of its value. But they're going to change that to a tier 1, 100% valued asset. It seems weird, or has no counterparty risk. And this thing is going to morph into a huge. You haven't even seen the amount of lawsuits. There's a guy by the name of Tan Chai Min who has a suit against RBS, Royal Bank of Scotland, saying, "Hey, you guys sued me. You owe me $1.5 million. You owe me 3.3 million shares." And I was in effect saying, he says, I was just doing what you told me to do. That it was common practice to rig the LIBOR rate, and we took requests from hedge fund clients. Now, you think about common practice to rig the LIBOR. We took requests from clients, hedge funds, from clients. This is going to morph into the biggest, gigantic, and it could be. And here's what happens with currency. Currency is the overproduction of currency, right? But what the real driver behind a currency crisis, and I think we're headed for a currency crisis. So the short answer to your question about buying metals, coins, not stocks, not GLD, not SLV, physical metal. But the real driver is confidence. Now, what happens if Congress has to step in and say, oh, wait a minute, we got to limit the liability. So we have to limit the liability for all this fraudulent activity? Tim Geithner, the Treasury Secretary, knew about it as far back as 2008, maybe 2007. He wrote an email to the Bank of It. He should have called the cops. After all, they're alleging anti-hearing wire fraud, securities fraud. He should have called the cops. He should have called the FBI. This is criminal activity. What happens to the confidence in the system? And my overarching thing about the economy, whoa, we need jobs. No, you cannot grow the economy grounded in a backdrop of fraud, wrongdoing, where nobody goes to jail and everybody gets bailed out. I wrote a piece in 2009 and caught crap about this, saying, hey, listen, we should just go hit the default option. And at the time, it would have cost us $6 trillion. We'd be on our way out. Yes, people would have been hurt. Real estate would have collapsed. That's what they're doing. They're holding up real estate prices because of all these bonds in American banks.
Okay, I got 4 questions for you.
Hit me.
How much of this total debt, this what is it this week, 16 trillion?
16 trillion. People like Lawrence Koltikoff, who is a professor of economics at Boston University, says the real government accounting, GAAP accounting, is more than 200 trillion.
Oh, there you go.
USA
Perfect.
Today came out and said the real GAAP accounting for a yearly deficit is 5 trillion. So the 16 trillion is our cash balance deficit. It's way higher than that.
All right. How much of this is interest that's just been rolled over and rolled over and rolled over?
It's got $200-300 trillion. If they keep going the way they're going, they're going to have $1 trillion in interest. So we won't have $1.5 trillion cash deficit. We'll have $1 trillion in interest. So why
can't we just zero out this debt, just dump the interest, just tell everybody you're just going to eat it? We're just going to hit the reset button.
Okay, and then we'd have to tell everybody, hey, listen, we spend 43 cents more than we take in, and immediately, bam, we're going to cut everybody's pay by 43 cents, but the economy would grind, much lower, so it wouldn't be a 40% loss. It'd be like maybe a 60% loss. How do you suppose the economy...
Now, how would that happen, Greg? Amplify that.
Because all of a sudden, right now, we are paying people and doing all this stuff and funding these wars and funding all this stuff because we're the world's reserve currency. We're spending 43 cents more than we take in. And if we can't put that debt out there, if we can't sell that debt and sell treasuries and finance ourselves, then all of a sudden, bam, we're having to live within our means of what we take in, but the economy would slow down much more than just the 43 cents of every dollar we take in.
Okay, explain this real quick. When you sell debt, when a country sells debt,
yes.
What is the nature of the debt? What is the debt?
And we sell treasuries. And last year, and this is a really underreported story, this is according to the Wall Street Journal, the Federal Reserve bought 60% of the treasuries last year, 61%.
And these are 20-year bills?
Yeah, these are treasury bills. These are 1, 5, 7, 10s, 30s. This is our treasuries. And that's what operating interest is about.
So there's no standard for this. Okay, I got you. There's no standard for it. It's not like whenever a government sells these bills, it's a fixed amount. At least that would be predictable.
They sell all kinds, and China was buying, but they stopped buying. They are trying to sell their treasuries, and so we're going to be in a situation at some point where. Could we be in a situation like John Williams says that there's 12 trillion liquid dollar assets held outside the country, and people start selling a trillion or two? What's that going to do with the dollar? What's that going to do to the value? It's going to kill the value of the dollar. We have countries right now: Brazil, India, China and Japan are now trading yuan and yen. So that's the number 2 and 3 economies of the world. We could get away with what we're doing because we're the world's reserve currency. People have to hold dollars to buy oil. And what happens when we go back to where it was in 1970, where you could buy oil in yen or yuan or euros or anything you want?
What if we tapped into our own reserves and just dumped everybody?
That would probably be a good idea, but we are, we're not really in that position to do that. We have great natural gas, reserves, but then there's the fracking element. We have great oil reserves in Alaska, but then people want to keep that land pristine. So we have great reserves off our coast, but then we have the Deep Horizon event, the BP oil spill. So that's easier said than done. Well, we could go nuclear in Fukushima. So
Well, let me ask you this: there was a $5 billion contract awarded to build a highway through across east to west across the top of market number 4. That would be that whole Kennedy thing and everything.
Yes, Massachusetts.
Massachusetts, exactly. No, actually, it's Dallas, Texas.
Market number 4. Okay.
Yeah, it's that whole Kennedy thing. Sorry about that. That's a little too dark for this weekend. My apologies.
Yeah.
The $5 billion contract's been awarded to a Chinese company. Why does this happen?
Maybe that's payback for them not dumping their treasuries. I don't know. I don't know what Hillary Clinton and Tim Geithner are doing over in China. I have no idea what they're doing behind closed doors, but we are financially very, very weak, and we have a lot of debt, and no country on earth has pumped out this much currency. And when you have a lot of something, the price isn't real high. And so anybody, the guy with a $30,000 or $40,000 job should be taking time to protect himself. I mean, you had Lindsey Williams on here talking about buying food, and not because there won't be any, because maybe it's the cheapest it'll ever be. Some people you can't say go out and buy gold. It's $1,600 an ounce. Some people, cannot allocate money for that kind of stuff. There's going to be a lot of people who are going to end up poor. I was telling my, a friend of mine, my wife and I's, and I said, you don't think the 401k was invented for you, do you? And she looked at me and she said, if we have a currency crisis, that's going to be a national security issue. We're not going to, kill Wall Street and kill, the financial engine of the world by you taking your money out. Sorry, capital controls, that stays in.
Which is worse, Greg? Inflation or some banks collapsing?
Oh, I think inflation is insidious because it spreads it out to everybody. If banks collapse, we had banks collapse in the Great Depression. And here was the beautiful thing that people don't talk about in the Great Depression. Our paper money was still, even though we revalued gold, it was a $20 gold piece in 1933, and then we did away with that because we wanted to value gold at $35 an ounce so FDR could print more money. But if you had $10, if you had $20, you had deflation. If we had real true deflation in commodities, gas would be $1 a gallon. See, I think in people like Elizabeth Warren, who's running for the Senate up in, Massachusetts or Connecticut? I think it's Massachusetts, against Scott Brown. She said when this thing first happened, she said, we bailed out the top and told everybody else to kiss off. We did. So, this would have been Armageddon for the bankers, absolutely positively. Nobody would have gotten any bonuses. All these guys would have failed. Houses would have been cut by 90%. Gasoline would be 75 cents a gallon. And we'd still have the mortgage crisis, but we'd be on our way out of here. But the thing has gotten worse because we added more derivatives. We added more debts. And the other thing is we're very close to war in the Middle East. I mean, they just had a bus full of Israelis get blown up in Bulgaria.
Yeah, who saw that coming, right?
Netanyahu is saying we're going to have a strong response and blamed it on Hezbollah, which is an Iranian terror group. I don't know whether they did it or not. I don't know whether they have it. But he's talking about how, this is why, the most dangerous country in the world can't have the most dangerous weapon in the world. That's one of his quotes. And so, wow, what is that a precursor to? And then Syria, John McCain wants to go, hey, let's just bomb Syria. Well, the Russians have a base, a naval base in Tartus. They're not going to be real keen on bombing Syria and losing their base.
No, it might turn into the next Cuba.
Oh, it might turn into the next World War III. I mean, this is a very dicey situation coming at a time when America is very weak. Listen, if World War were to come to America in the 90s, we could have done a lot better. We were the king cat's meow. We were the Mac. We were there. We were cool. We had a surplus. Now we have year-over-year surplus is at $1.3 trillion. Gap surplus, deficits, gap accounting. According to USA Today, but John Williams had this months ago at shadowstats.com, the real deficit annually isn't $1.234 trillion. It's $5 trillion. If you were a corporation and counted for everything, the bank bailouts, Fannie Mae, Freddie Mac, Medicare, Medicaid, everything, it'd be $5 trillion a year. We're in very dicey. We've never been this way ever in the history of the world. Not this much currency, not this many derivatives. J.P. Morgan Chase, one bank, has $70 trillion in derivatives, according to the comptroller of the currency of the United States of America. The gross GDP of the world is like $67 trillion.
Oh boy! All right, we got about a minute left. Would say anything you want to.
People should listen. There's a lot of people that go out and buy gold. People will tell you that. But if you need tires in your car, you should get it. If it might be a good idea to stockpile food. If there is a bank holiday, if there is a grinding halt to commerce for a week, for 2 weeks, for 3 weeks, you should treat it like an earthquake or a hurricane or something like that. This can happen in America. It has happened many times before. And people should protect themselves, is I guess my first and foremost thing. Be thinking about, hey, maybe we should have some dried food. Maybe I should get my car working in really good working order. Maybe I should get my house in order here. I wouldn't take on a lot of debt.
We got to, all right, dump your debt as fast as you can and cowboy and cowgirl up. Yes, Greg, will you come back soon, please?
Sure, yes, I will. Thank you, John B. Wells, for having me on.
Oh, man, anytime. Now, did everybody get what he was saying? You were paying attention, weren't you? USAWatchdog.com. Greg Hunter. We'll be back with Rob Dew.